Each story you hear on Planet Money starts with a question. What happens if we refund tariffs? Why are groceries so expensive? At NPR, we stand for your right to be curious because the forces shaping our world can be hard to see. Follow NPR's Planet Money wherever you get your podcasts and start seeing how the economy really works.
Funding for the Think podcast comes from Wise, an app for people using money around the globe. With the Wise account, you can send, spend, and receive in up to 40 currencies. You can download the Wise app or learn more at wise.com. Terms and conditions apply.
This episode is brought to you by Progressive Insurance. Do you ever think about switching insurance companies to see if you could save some cash? Progressive makes it easy to see if you could save when you bundle your home and auto policies. Try it at Progressive.com. Progressive Casualty Insurance Company and Affiliates. Potential savings will vary, not available in all states.
Last week, the Senate confirmed Kevin Warsh to be the next chair of the Federal Reserve. It is a big and daunting job under the best of circumstances, given the Fed's mandate to promote maximum employment while keeping prices stable. And it's even harder when the president tries to influence the agency's actions on interest rates. From KERA in Dallas, this is Think. I'm Chris Boyd. Donald Trump is hardly the first president to want the Fed to briefly juice the U.S. economy in time for critical elections, which, as my guest will explain, is exactly why Congress set the Federal Reserve up to be independent and able to make the kind of hard decisions that could benefit the country in the long run. James Jacoby is a correspondent at Frontline. His new documentary there is The President and the Fed. James, welcome to Think.
Thank you so much for having me, Chris.
So Congress created the Federal Reserve System in 1913. Just briefly, James, remind us of what the Fed is supposed to do for us.
The Fed is our central bank, and basically what it's meant to do is to keep in mind it controls the money supply, and it controls interest rates, which is the cost of money, the cost of borrowing, and so it has this very powerful lever. We all are at the whims of the Fed to some extent because interest rates, it's how much, it determines how much we can, how much it costs to borrow money for a car, for a home, how much it costs for banks to borrow from one another or financial institutions to borrow from others. And so it's something we don't think about very often, but it's really an important part of our economy. It's just the most important lever in the economy is essentially given to the central bank. And it was created to be independent of political whims because it's meant to think about these interest rate decisions in terms of the long-term health of the U.S. economy. And it has two mandates from Congress. It's meant to keep inflation low so that our money retains its value over time. And isn't inflated away in terms of its value. And it's meant to keep employment robust in this country as well. And so those are what are called the two dual mandates of the central bank. And it's an incredibly vital institution in the United States. Central banks all around the world look to the Federal Reserve as basically the benchmark for where interest rates are going to be and the cost of the American dollar and borrowing in the economy.
The Federal Reserve is an independent central bank. What can the Fed do without getting any approval from Congress or the president or any other entity?
Well, it makes these interest rate decisions independent of Congress or the president. So basically, it has this lever, this very blunt instrument that what's called the Federal Open Markets Committee sets interest rates, and it is supposed to be able to do so without any interference from political pressures. Because if, for instance, everybody on the surface likes low interest rates because it's cheaper to borrow money, it stimulates economic activity. It's easier to borrow money to buy a house, to buy a car. That's a great thing. But sometimes the economy and the economic conditions don't call for low interest rates because if there is too much economic activity, too much money chasing too few goods, we get inflation. And so the Fed is meant to then slow down or cool off the economy by raising rates when inflation gets too high.
How much do stock markets tell us about how well the economy is doing and what the Fed ought to do with interest rates?
I mean, it's a great question. The stock market is a strange indicator because it doesn't necessarily reflect what's happening in the real economy for all of us. It can reflect, how corporate earnings are, profitability. It nowadays it can reflect basically a lot of just sort of investor sentiment. People have money that they want to invest, and there's kind of a gambling aspect to things. Um, Now, the thing is that when interest rates are low, markets love it because people actually can borrow money and invest it, or there may be more activity, more economic activity when interest rates are low, that then supports people. Their businesses are doing well, there's a lot of growth, and so therefore there may be more investable capital out there that pushes markets up. So markets have traditionally really loved low interest rates, but markets also don't like inflation because they know that that might mean that the Fed is going to have to raise rates, which can slow down economic activity. But the stock market is not necessarily a great indicator in terms of how we're all doing in the American economy.
Presumably, every president would like to see the economy growing at a good pace while they are in the White House. All the Americans, just being in the economy at those times would like to see the economy growing. Why not set the Fed up to be responsive to what any particular president wants for the economy at any given moment? Help us understand that.
Yeah, I mean, it, a good robust growth is what everybody wants, including the Federal Reserve. The problem is sometimes growth can be too hot and it can create inflation. We have an inflation problem right now. Everybody knows it. Affordability, especially since the pandemic, has been a major issue for American households. The cost of gas, the cost of food, the cost of rent, the cost of so many different things. And what the Fed really works with is by lowering and raising interest rates, it can juice the economy or cool it down. And so, yes, we all want a strong economy, but we don't want high inflation. So sometimes the Fed has to make the very unpopular decision politically to raise rates to sort of take the punch bowl away at the party if things are getting too hot and there is an increased risk of inflation, because we all know what that means right now in terms of elevated costs, and for all sorts of things, whether it's at the pump or elsewhere. We know the pain of that, and it becomes a major political issue. So we want that function independent of our elected leaders. And we've seen cautionary tales in the past when, for instance, Richard Nixon was running for re-election in the 1970s. He pressured his Fed chair at the time, Arthur Burns, to lower rates to juice the economy in advance of the presidential election. The country, of course, loves it, and people love it because rates are low, borrowing's happening, and spending's happening. The problem is, as a result of that and a bunch of other factors, in the 70s and into the 1980s, we got extremely high inflation as a result. And that's extremely painful. And then the Fed has to come along and raise rates to very high levels, essentially throw the economy into a recession in order to get inflation down. So they have a very strong and blunt instrument at their disposal. We do not want there to be political interference with what they're doing because they need to think about the long-term stability of the economy, not short-term gains, which is what most of us or elected leaders would be thinking about wanting.
Right. I mean, it would seem like elected leaders would be glad the Fed exists to make those hard decisions for the good of the country, right? Like the person facing reelection would find it very difficult to take actions that are painful in the short term and beneficial in the long term.
Yeah, look, no politicians like to talk about pain. I mean, that's a losing proposition for any elected leader. They may understand and appreciate the Fed and needing to be independent and make these decisions to take that away from them as a responsibility, whether you're in Congress or the White House. But no, we need at the center of our economy an institution that's willing to make unpopular decisions for long-term health. And so that's really what's at stake here. That's what the conversation's been about, especially in the second Trump term.
All right, James, President Trump was the person who chose Jerome Powell to chair the Federal Reserve back in 2017. What do we know about Powell's qualifications that appealed to President Trump at that time?
Well, Powell was very popular among Wall Street types. Powell was kind of out of central casting when it came to like a Fed chairperson, right? He had worked on Wall Street. He is a lawyer by background. He understands financial markets, which the Fed is very tied into. He'd also been a governor on the Federal Reserve Board. He'd been appointed by George W. Bush, George H.W. Bush, to be a governor on the Fed board. So he had a lot of experience at the Federal Reserve, was a sort of old line Republican, conservative, and had a sort of deregulatory view of the economy, which aligned with a number of people in the first Trump term. So he was a very appealing prospect to President Trump, who didn't know him well, but I think felt as though the financial markets would respond well to it, think that the Fed was in good hands with someone so experienced and someone so seemingly prudent and kind of conservative.
When did President Trump begin to sour on Jerome Powell?
Well, rather quickly. It didn't take long. So Powell's appointed in 2017. The documentary, the backstory in the documentary begins with the Rose Garden ceremony where President Trump has a lot of very positive things to say about his appointment to the Fed chairmanship. And then basically it takes about a year or so, or a little less than a year, when Powell continues to start to raise interest rates. The Fed had been at near zero interest rates in the wake of the financial crisis, going back to 2009, 2010. They had been extraordinarily loose with monetary policy in the wake of the crisis to try to get the economy on better footing. So it was Fed Chair Powell at the time who continued what was a trend of what they said was normalizing interest rates, taking them away from zero, which is unprecedented that they'd been at zero for many years, bringing them up. And basically what happened is the stock market had a bit of a fit because they don't like when rates rise. And then President Trump had a fit as well.
I mean, President Trump was obviously not the first president to be frustrated by Fed rate hikes. He was much more publicly vocal about it than his predecessors have been.
Yes. I think every president behind the scenes has expressed frustration with the Federal Reserve. Neil Kashkari, the president of the Minneapolis Fed Bank, said as much to us, that it's a dynamic that's sort of built into the system. Again, they're making decisions that might be politically unpopular, but they have to do it for the long-term health of the economy. So our elected leaders often take issue with that and want low rates. We've had presidents that have taken issue with that, certainly behind closed doors. And what was different this time around, meaning in the first Trump term, was that President Trump took to Twitter and other media and basically berated Powell and the Fed, and essentially called into question what they were doing, and basically called them names and picked fights with them, basically saying that they were getting in the way of what his economic agenda was trying to unleash at the time.
What's interesting is that when Chair Powell was asked about the president's comments, he would, invariably reply, I'm not going to comment on that. What the president has said, it would be inappropriate. I mean, in some ways, that seems like kind of a flex, right? You have the president speaking all the time and Jerome Powell saying this sort of discourse is not appropriate in public.
It's funny. It's both a flex, but also a constraint of the role. I mean, the Fed chair role is meant to be very, very conservative in what he or she says. You're not really supposed to say much. You're not supposed to comment too much on what the president is saying. It's not a role that has traditionally been outspoken about anything. You kind of, it's almost cryptic. You talk, it's been hard to make a film about it because it's just so boring when you have to listen to Fed chairs speak. They're talking about, there's a 1/4 point rise and we're doing it for this reason and we're worried about inflation here or the labor market here. They're meant to be boring purposely. They're technocrats. And so what you had is, yes, there's a flex involved in Powell not responding to the sort of taunts of the president, but there also was a constraint. And I've talked to, insiders at the Fed, both current and former, who say, of course, we would have wanted to come out and say and explain, why the president is wrong about X, Y, and Z. But the constraints of the institution are such that they just can't do that. So it's both a constraint as well as a flex. But then, of course, more recently, we have seen Powell take a stand, which has been unprecedented in terms of defending the institution from what he's seen as massive attacks on its independence.
James, you mentioned a few minutes ago that you spoke with Neel Kashkari, and this was the only person at the Fed who was willing to speak with you. He is the president of the Federal Reserve Bank in Minneapolis.
Yeah, that's correct. One of the strange things about I've done several documentaries about the Fed over the years, and Neel Kashkari really has been the only sitting Fed official that's been willing to talk. It's a very insular, somewhat, well, not somewhat, guarded institution. And again, the Fed presidents and governors are very, very loath to kind of speak off the cuff and do interviews. They are very scripted. But Neel Kashkari, to his credit, has really been willing to sit down for in-depth interviews, challenging interviews with me over the years, and I really appreciate it.
So do you think the others are afraid of accidentally overstepping the boundaries of what they're allowed to talk about, or are they somehow afraid in this current climate that their jobs might be at risk if they speak up?
I don't know exactly. It's kind of a mystery to me. I think it's probably all of the above. I think that they want to, you'll sometimes see Fed governors on CNBC and in the financial media. They're there to kind of have a very quick segment about whatever interest rate decision has been made recently. They don't want to be asked a wide range of questions in which they might say something that could, rub the markets the wrong way or prognosticate about something. I think that they're worried about saying the wrong thing to a wider audience because, again, this is an institution that carries so much power and weight that I think that better safe than sorry is generally their attitude. And at Frontline we do very lengthy, in-depth interviews. So, excuse me. So they are. I think that these sitting Fed officials are afraid of that. They don't want to be asked something that they're not ready to or prepared to talk about. Whereas Neel Kashkari, over the course of basically 3 documentaries that we've made about the Fed, has always been game to sit down for a lengthy, wide-ranging interview and challenging interviews.
The Federal Reserve System is independent, but Fed chairs and Fed governors are appointed by presidents and confirmed by the Senate. What power does the president have to remove a chair of the Federal Reserve?
It's a great question, and it's at the heart of everything right now, which is that the president needs to have what's called for-cause removal power. Only the president needs cause, which could mean malfeasance in office. It's a very high bar, the cause to fire a Fed chair or a sitting Fed governor. So, for instance, we don't really know what that means at this point because it hadn't been tested until now. This is the first president to try to fire a sitting Fed governor. It hasn't been Jerome Powell in this case. It was Lisa Cook, who's on the Fed Board of Governors, who was a Biden appointee to the Fed Board of Governors, and the president has tried to fire her for cause. His cause being that an kind of unsubstantiated allegation of mortgage fraud from about a decade ago. That case has ended up at the Supreme Court, and the Supreme Court hasn't ruled on it. But even the most conservative justices, in listening to the Supreme Court arguments, were very dubious of the president's lawyers' arguments about whether that was in fact cause to remove a sitting Fed governor. This was designed by Congress to make it very difficult, have a very high bar, and cause really needs to rise to the level of something really egregious that a Fed governor or Fed chair does in office in order to remove him or her.
So some listeners may be on the edge of their seat anytime, the Federal Reserve is being discussed. Some may follow less closely. Can you just briefly remind us why Lisa Cook got in trouble with this two different mortgage applications, right, for a primary residence?
Yes, there was a discrepancy on her mortgage application. the one on one application, she'd kind of checked the box that it was a primary residence when it turned out that it would later become a secondary residence. It's, it needs to be taken in the full context of what she submitted to her lenders, and it needs to be put in the full context of what's really going on here politically, which is that she was accused of mortgage fraud. Now, mortgage fraud, this is an accusation that came from Trump administration officials. Um, Mortgage fraud needs to be intentional. In a court of law, you'd need to prove an intent to defraud a lender. Lisa Cook and her legal team have now submitted hundreds of pages of documents, including some redacted mortgage applications, that really do suggest that she wasn't trying to mislead anybody. She did make an error on her mortgage application, but again, this was part of an effort to essentially remove her from her post. They found this in her mortgage files, and they tried to elevate it to the level of a cause for the president to fire her.
Okay, talk now about the surprise field trip that President Trump took to the Federal Reserve headquarters in Washington, D.C.
Well, it's important to set that up because, we're here talking about for cause. And while the president hasn't tried to fire Jerome Powell, he may try to fire him still. They've been looking around for a cause to fire him. And so Jerome Powell had testified before Congress last June, and basically a routine testimony before the Senate Banking Committee. The Fed chair does that twice a year to talk about the health of the economy and what the Fed's been doing. In that particular hearing, Senator Tim Scott, an ally of the president, had started this line of questioning about cost overruns at a renovation of Fed headquarters in Washington, D.C. Now, there's a multi-billion-dollar renovation going on of the Fed buildings in DC. It's running about $700 million over budget. And that's a legitimate line of questioning, of course, by Congress, which has oversight over the Fed, as to understand why there have been these cost overruns. However, it became kind of a pretext for looking for a cause to remove Powell. Senator Scott, near the end of the hearing, said, I don't like to be misled, kind of insinuating that in some way Jerome Powell was misleading Congress, which of course is a major problem and could be prosecuted if push comes to shove. And it has since become the basis for a criminal inquiry into Jerome Powell, now formerly the head of the central bank. So what happened was, right after this testimony, and right after this line of questioning about the cost overruns, the president pays a surprise visit to Fed headquarters. He only lets them know the night before that he's going to come on what was already a scheduled tour of Fed headquarters from some lawmakers, but the president was going to join them, which is highly unusual. It's very unusual for a sitting president to go over to Fed headquarters, especially in a surprise fashion. And he toured around the construction site and kind of talked about the fact that it was good to be back on a construction site as having been a developer himself, and talked about how high the cost overruns were. And this is the first time essentially that Trump and Powell had been in the same frame since 2017 in the Rose Garden when Powell was appointed by Trump. And it's this extraordinary scene in which essentially the president is trying to suggest that there's something very wrong or fishy here in terms of the cost overruns of this building. He pulls out a piece of paper at one point and says it looks like it's even more than the Fed has been admitting to. You've got Powell, who's sort of trying to fact check the president in real time and shaking his head. It's an extremely awkward scene, incredible to watch. I mean, I've watched that scene now hundreds of times, but I still can't get over it. And both men in hard hats, and it's just so bizarre. And you have this contrast between these two men. You have Powell, this very kind of tight-lipped, old guard conservative, and you've got Trump and his sort of bombastic self there, and you've got cameras. And essentially, the president was trying to embarrass Powell in front of the cameras, and Powell wasn't really having it.
I have not watched the scene hundreds of times, but I have seen it. And it strikes me, James, It really resembles the kind of, like challenging dramatic scenario that would be set up on a reality TV show.
Yes, it does. It totally does. And look, I mean, that is essentially what it is. I mean, the president announces last minute that he's going to visit the headquarters. That's again really unprecedented. So you know that there's going to be drama. Then you invite the press corps to be there, and essentially it was a reality show. It was a really extraordinary moment for so many reasons. And again, what's so interesting too is that if you think about the context of the second Trump administration, we've very rarely seen another official, another member of the government kind of fact checking the president in real
Mm.
time, basically opposing him in the same frame at the same time. And here was Jerome Powell essentially saying, no, the president pulls out this piece of paper, throws out an inflated figure saying it costs, a, a lot more than it has cost. And Powell looks at the piece of paper and says, no, you added another building, a building that happened to have been completed 5 years ago. So it's just incredibly dramatic. And as you say, it really is out of some very bizarre reality show.
So ultimately, there were these criminal allegations filed against Jerome Powell because of the cost overruns. I mean, Powell could have taken the hint at that point, or a number of other points, that the president wanted him gone, and simply left the job early. Do we know why he refused to do that? Assuming that it's not like Jerome Powell will be unemployable if he loses the gig at the Fed.
Of course. I mean, it's another great question. I think what we know is that Powell, comes out and in another extraordinary moment, um, you know, basically to reveal to the public on camera that he has been served criminal subpoenas from the Department of Justice, insinuating that he's broken the law, criminally broken the law, misleading Congress, or somehow, that there's been corruption in terms of the cost overruns at Fed headquarters. So he decides to take it upon himself and say, I'm going to protect the independence of this institution. I'm going to come out publicly and call out this president for what this is. And he basically says in no uncertain terms, this is a bogus investigation. The president is and his administration is using the power of criminal subpoenas and a criminal investigation into him, to basically pressure him and the Fed board to do what the president wants, which is to lower interest rates. And Powell comes out and says it. This is after he's been called every name in the book by the president over the course of both the first term as well as obviously the first year of the second term. But this is really when he comes out and says this is a bridge way too far, when we're talking about a criminal investigation to the chairman of the central bank, and he fights back. I mean, that's really what that was. And yes, he could have resigned. He could have said, enough is enough. I don't want to take this anymore. But he took it upon himself to essentially say, I have to stand up to this president, in this particular case, because I have to stand up for the independence of the central bank here.
Is it fair to say that Jerome Powell and others at the Federal Reserve held interest rates too low at the start of the pandemic when inflation started to take off and sort of set themselves and the country up for the problems we're having now?
Yes, without a doubt. And we get into that in this documentary, right? Which is not to say that, Jerome Powell has a lot to answer for in terms of his tenure. And, Frontline has done a number of films that have been taken a very critical eye toward the policy of the Federal Reserve over the past decade or so, including the massive mistake that they made during and in the wake of the pandemic in letting inflation get to 40-year highs, and a crisis, an inflationary and affordability crisis that we're all suffering from now. And the Fed deserves a lot of scrutiny as an institution for having made that mistake. And there are many people that have called upon Powell to resign for that. But what I'd say is what's been strange about this is that we're not having a substantive conversation right now about the mistakes that this Fed has made and the accountability that needs to be there for those mistakes. The president has refocused the conversation on a very basic conversation about, the independence of the Federal Reserve, right? We're not talking about reforms. We're not talking about real accountability. We're talking about the use of the Department of Justice to launch a criminal investigation into a sitting Fed chair, or, unsubstantiated mortgage fraud allegations against a sitting Fed governor, and as a means to try to remove or a pretext to try to remove a sitting Fed governor. We're not really having a conversation, unfortunately, in this country about what might be best to reform the Fed, the role that the Fed has played for better or worse in our economy over the past decades. We're having a talk about independence. So back to your question, yes, the Fed had labeled the inflation that started to crop up during the pandemic as what they said was transitory, which essentially meant temporary. And it signaled to everybody that they thought, oh, it's going to be a blip and then it's going to come down. And they kept rates incredibly low during that period of time. They also took all sorts of other measures to keep the economy afloat, pumping trillions of dollars into the financial system, for instance. And they were way too late to raise rates once inflation proved to not be transitory. And in fact, Lael Brainerd, who I interviewed for this documentary, a former Fed governor and vice chairman of the Fed, admits as much. She says they did make a mistake. They were about 6 months too late, and the repercussions have been immense.
James, we keep talking about, the independence of the Federal Reserve, independent from interference by Congress or by the president. I mean, the Supreme Court is also supposed to be independent, and we think about it as being sort of independent of partisan sentiments, at least historically. But are, votes of the Board of Governors now a little bit more like we assume deliberations at the Supreme Court, where things tend to predictably fall along partisan lines?
Well, yes. Unfortunately, that is the case now, where politics seems to have seeped in more into the Federal Reserve Board than it has in the past. The real test of that, though, is going to be going forward. We've seen, a disagreement and divisions on the Federal Reserve Board that we haven't seen in a very long time, that do fall along the lines of Trump appointees versus non-Trump appointees. Typically, the Fed board has reached kind of consensus on its decision making in the past. It's much more difficult right now to find consensus. However, right now, because inflation is elevated yet again, it's been above the Fed's target for 5 years running, but it's now more elevated because of the war in Iran and energy prices and all the tumult in global markets because of that. What we're seeing is that the big test of kind of whether people are political or not is going to be now to see whether, in fact, Trump appointees to the board will want lower rates despite the fact that inflation is very high and rising. That's going to be a real test. And what we're already seeing is that some of the Trump appointees that Trump has been able to put on the board over the years are acting independently. They don't think that there necessarily needs to be lower rates. In fact, some of them may see that higher rates are necessary, and are willing to break with the president in his view that rates should always be lower. So, I think that this is, it sort of remains to be seen. It'll be an interesting test as to whether we see, especially given the inflationary pressures right now, some of the Trump appointees and how they vote going forward. And I'd imagine that, once they're on the board, they are going to be kind of independent and have to make decisions for the long-term interest of the economy as opposed to what the president wants.
Kevin Warsh was recently confirmed as incoming Fed chair. He was asked directly during the confirmation process whether he would be a sock puppet for the president. He responded negative. What do we know about how well suited Warsh might be to the task of resisting pressure to make monetary policy decisions to suit the political aims of the person who just gave him this very prestigious job?
Yeah, I mean, I think that is the $1 million question. How independent will Warsh be, given the fact that he's wanted this job for a very long time? We know that. We know he was a front runner for the job actually back in Trump's first term when Powell got the job. Warsh had wanted it. He was one of the top contenders at the time and didn't get the position. Um, Look, I think Kevin Warsh um, is a highly respected person. People I've spoken to that have worked with him, both he's a former Fed governor. I've spoken to some of his former colleagues. They have a lot of respect for him and think that he will be able to act independently and understands and appreciates the kind of sacrosanct independence of the central bank. People that have worked with him on Wall Street, where he also has worked for a big part of his career, have a lot of respect for him and his independence. It's different when you're in the job, though. We'll see if he starts to make decisions or the board makes decisions that are at odds with the president and he comes under attack, as Powell has come under attack. We'll see how he withstands that pressure. Or we'll see whether he is truly independent or really does want to do what the president wants him to do in that role. I think skeptics of Warsh have a bunch to point to as well, which is to say that he's wanted this job. He's changed his tune about lower rates over the years. He used to be kind of an inflation hawk, but now thinks that lower rates are called for, even though inflation is still high, which isn't really the position of a traditional inflation hawk. He has a whole theory about why he thinks rates could be lower right now. And that was seen by his skeptics as being something that was going to get him the job. And also, of course, there was another exchange at the hearing with Senator Warren, where she asks what seems to be a common litmus test question for these appointees these days, which is, did Donald Trump lose the 2020 election? And Kevin Warsh tried to kind of evade that question. And so for those who would be skeptical of his independence, that was a bit of a red flag.
Presumably, if Kevin Warsh had actually gotten the job when he first wanted it years ago, things would have been a little simpler that he had to deal with. I mean, in this second term, President Trump has been, maybe he's not more ambitious than he was in the first term, but he's been able to get a lot more done, right? The immigration crackdowns, tariffs, tax cuts. How have all of those changes in the second Trump term affected the economy that the Fed is supposed to be holding steady for all of us?
Yeah, it's a great question. I mean, look, Trump has been much more ambitious in the second term. Just to think about the extent of the tariffs, it's totally extraordinary. It put the Fed in a massive bind because tariffs, we do know that tariffs can be inflationary. They can push prices up of imported goods. They can also slow down economic activity because prices go up. So the Fed is watching that and saying, okay, well, that's the prerogative of the elected leadership. Let's wait and see what the effect of those things are. Trump was berating the Fed to be lowering rates to try to, juice the economy as he's rolling out the tariffs. The Fed decided to kind of wait and see and hold rates steady, which really, upset the administration and was kind of like a big catalyst for the escalation and the attacks on Powell and the Fed by the Trump administration. But it's perfectly reasonable that the Fed would want to wait and see what the effects of the tariffs would be, considering how broad they were, how massive they were, how much of a major rejiggering of the global economy and the American economy they would represent. So, the Fed was trying to be prudent, and the president took issue with that. Immigration is another thing. When you're bringing immigration essentially to zero, and you have a massive deportation program, then that can very easily push up the price of labor. In fact, that was something that the Trump administration wanted to happen, was that if there are fewer immigrants, that maybe American citizens would see their wages go up. If there was less competition from outside labor, from migrant labor. So that pushes costs up of labor, which could be inflationary. So here the Fed was in this position after the pandemic, after having made the mistake of allowing inflation to get to 40-year highs. We're all feeling the affordability crunch right now. And here comes the president with totally his prerogative, his mandate to unleash all these economic measures that would affect potentially the Fed's inflationary mandate or affect labor markets. And so the Fed had to basically make the decision to wait and see. And that really did rub the president and this administration the wrong way. And that is a major reason why we've seen this escalation.
How would an unwarranted drop in interest rates affect the global economy potentially? Like, let's just say that the Fed did it one time to please a president. What would the ramifications of that be?
Well, one thing for sure is that it could exacerbate the inflation problem. So I asked that question to Neil Kashkari in the documentary after a scene of watching the president give a speech in Pennsylvania. It's the speech where he called affordability a hoax, the affordability crisis a hoax. He also berated Powell for being too late to lower interest rates. And I asked Kashkari, I'm like, what's the danger in lowering rates? And his answer is very basic. It's that with inflation still too high, it's still above the Fed's target. If you lower rates and you stimulate economic demand in the economy, that can would likely start to put pressure on prices. You're stimulating economic demand in an economy that already has higher than target inflation. So if the economy heats up and inflation's high or elevated, then it has the risk of making the affordability crisis worse. And that would be the big issue. That's the reason that that a number of the members of the Fed Board of Governors have decided not to lower rates despite the president's demands.
Certainly, President Trump campaigned quite heavily on his ability to bring down prices, to get control of inflation, to make the economy just sing along for absolutely every American participant in it. I mean, presidents and presidential candidates often oversell their ability to do things. They are often maybe blamed for things that are not entirely within their control. Do you think, though, James, that the president's focus on Jerome Powell and the Fed more generally, Lisa Cook, is a way of diverting attention from the fact that what the president promised, the president has not at this point been able to deliver?
Yeah, that wouldn't be unique for President Trump to do that. A lot of presidents over time, when the economy hasn't performed the way they wanted it to, have blamed the Fed. And so, for instance, it's going to be interesting again going forward because it's the president right now is facing a situation where inflation is above where it was when he took office. Bringing down inflation was one of his main campaign promises. Inflation was coming down during his first term. During his first year in his second term. The Fed was cautiously optimistic about that, even though a number of the president's policies, including tariffs, immigration, tax reform, were all potentially inflationary. Yet then you have the war in the Middle East and the closure of the Strait of Hormuz, which is pushing energy prices way up. And all of a sudden, you have a scenario where I'm curious to see how the president would pin the blame for elevated inflation on the Fed. He did want to blame the Fed, before the war in Iran, basically for not being on board with unleashing what could have been an even bigger economic boom during his second term. Right now, that's a difficult argument to make for the president that the Fed is to blame for the elevated inflation, considering they're the ones he's been blaming for not having interest rates low enough. So it's a real bind. But again, President Trump is not unique in trying to pin the blame for economic woes on the Federal Reserve. A lot of presidents have done that to varying degrees of success. But it's going to be hard to see how he does that going forward.
And ultimately, it is exceptionally important that Americans participating in the economy have a certain level of trust in the Federal Reserve, isn't it?
Oh, yeah. I mean, it's very important. it's it's one of these institutions, again, we don't think a lot about in our daily lives. People in markets do, or in financial markets, but it is, you have to trust that this institution is really acting in the long-term economic interest of the country. And inflation is such an insidious problem. And we've all been feeling the pinch of affordability um, over the past few years, and kind of trying to understand why is it that food costs have gone up so much, and all sorts of other things in our lives, rent and other things in what they call the basket of goods and services. Um, it's a major issue. And if we don't have trust that the central bank is going to try to tamp down on inflation, then what happens is, and economists call it, inflation expectations become unanchored. And that's when it's sort of a spiral. So it's just pain. And so we really do need to trust that the central bank has the long-term interests of a stable and low inflation as its central priority, and not answering to the president who wants low rates to stimulate economic demand.
Journalist James Jacoby is a correspondent at Frontline, which produced the documentary The President and the Fed. James, I really appreciate you sharing your reporting on this. Thank you.
Thank you for having me, Chris.
Think is distributed by PRX, the Public Radio Exchange. Find us on Facebook, Instagram, anywhere you get podcasts, and at think.kera.org. Again, I'm Chris Boyd. Thanks for listening. Have a great day.